How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. So today I'm bringing you another episode in the crypto series, and I wanted to talk about this very interesting case that happened at Heartland Tri-State Bank. So this was actually the fifth bank that failed last year in 2023, and so if I can just recap real quick. So there were four banks that mainly failed, three banks in March, one bank in April, and then this bank basically failed around kind of late May, early June of last year. What I found interesting about this case is that there was very little information that came out about this bank at the time. And it was kind of very mysterious. Like it was a smaller bank. I think it was maybe a little over maybe 100 million in total assets. So it was a very small bank out in Kansas. But it got closed kind of very quietly, and basically, and then some of the details got leaked out. It was like, oh, there might have been some kind of shenanigans going on, and then it was leaked out that, oh, the CEO fell into some kind of a crypto scam. And now we've gotten more details that have leaked out. But just to recap, so you had Silvergate Bank failed in the beginning of March, followed 2 days later by Signature Bank. I'm sorry, Silicon Valley Bank 2 days later, followed 2 days after that by Signature Bank in New York, followed just a few weeks after that by Republic First Bank, also in California with Silicon Valley. But I'm sorry, there's so many S's, trying to keep all these S's straight. So you had those four banks, and if you watch some of my previous episodes, so in episode number of the crypto series, episode number 3, I talk about the crypto collapse of 2022, and basically how that led directly into the banking crisis in the beginning of 2023, which is episode 4. And I talk about how, all of the crypto deposits got sucked out of these banks, and that basically Silvergate Bank was the primary bank. They operated something called the SEN network, the Silvergate Exchange Network, SEN, where all of the crypto money was flowing directly through this main, you could consider it kind of like the main vein, the main highway of how crypto was coming in and out of the banking system. And then Silicon Valley Bank and Signature Bank were their two primary backup crypto banks. So these were the three primary crypto banks in the country that were doing all this business with the crypto companies, and they got sucked into this whole thing. So my theory of the case is that while these banks did have other underlying issues that are still plaguing the banking industry to some extent today, the primary, basically the gasoline, that was the gasoline on the wood, so to speak, but the what lit the match and caused that fire was the evaporation of the crypto deposits getting pulled out. That lit the fire, and then the fire went ablaze, and then everybody popped up the hood, so to speak, and said, "Oh my gosh, what's going on underneath the hood here?" And boom, then all the problems started, and the run on the bank started, and off we went. So, but then, like I said, after all that happened, about a month or so later, we had this quiet bank collapse, and said so. Here, I just want to read kind of how this thing evolved here. So this was just a couple weeks ago. Heartland Tri-State Bank borrowed $21 million from an unnamed federal home loan bank in June and July of 2023, right before it failed. American Banker reported, citing a report from the Office of the Inspector General for the Board of Governors of the Federal Reserve and the Consumer Financial Protection Bureau. The $21 million in advances were not typical for the bank, which had not made such borrowings from the Federal Home Loan Bank system in the 3 previous years. So it is very common for a local community bank or small bank to have what's called a line of credit with the Federal Home Loan Bank. And the Federal Home Loan Banking system, I'll have to do an episode all about the Federal Home Loan Banking system, explaining, because it's kind of like the Fed. Like the Fed has 12 branches around the U.S. The Federal Home Loan Banking system has a number of branches around the U.S., and they serve a lot of community banks in their regions, the areas that they're at. And it's very common for a bank to have a line of credit with the Federal Home Loan Bank that's in their neighborhood, so to speak. So that's a very normal, everyday thing that goes on, and banks use that line of credit as part of their liquidity strategy. So that's a very normal thing. But But this bank they had a line of credit, but they had not used it in 3 years. And then all of a sudden, out of the blue, they're like, hey, we need 21 million. And like I said, I think this bank was only a little over maybe like 138 million or something like that in asset size. So it was not very big. So for them to just run out like that and borrow 21 million, again, is highly unusual. So we've got this, again, kind of different stories going around here. So now this is like this is going back to like 2 weeks ago. So the former CEO of failed Heartland Tri-State Bank, Shane Hands, was charged of allegedly embezzling 47 million from the bank to buy cryptocurrency, Bloomberg News reported, citing court filings. Haynes, who led the Elkhart, Kansas-based bank before its collapse in July of 2023, also allegedly took money from a local church, the report said. Prosecutors allege that Haynes embezzled fund through at least 11 wire transfers of bank funds between May of 2023 and July of 2023. And the loss of 47.1 million ultimately led to the bank's closure, according to the report. Haynes did not immediately respond to emails and calls seeking comments on the charges, the news outlet noted. So apparently what's taking shape here is that this gentleman got stuck in some type of a crypto scam, or got caught in some type of a crypto thing. And he basically needed money it sounds like he needed money to cover his bad bet. And basically he took money, he embezzled money from, all these wire transfers, took money from a bank, or took money from a church, took money from the bank. And obviously he, pilfered a lot of this money. So now the story's starting to take a little bit more shape. Now I have this, and this is from Emily McCormick wrote this piece from Bank Director, and I'm just going to read this out here. So on May 30th, 2023, Heartland Tri-State Bank CEO Shane Haynes allegedly initialed a series of wire transfers, pulling 47 million out of the Kansas-based bank over a matter of weeks. The 135 million Heartland asset, so I was correct, so it had 139 million in assets, failed after Haynes fell victim to a crypto scam, investigators say. Promised profitable returns by the scammers, he began purchasing cryptocurrency several months earlier, apparently using his own funds, and then later money borrowed by the bank from a correspondent bank, the Federal Home Loan Bank, from the correspondent bank and the Federal Home Loan Bank. So he was also borrowing from what's called a correspondent bank, according to the Office of the Inspector General for the Federal Reserve. How did Haynes purportedly embezzle those funds so quickly? It is, in its review of the failure, the OIG points to two root causes: internal control failures and what's called a dominant CEO. Heartland's board had policies in place that should have prevented the wires. In fact, directors approved a new policy on June 24th while the fraud was going on to lower the daily limit from 5 million to 3 million per sender. Most of Haynes' wires exceeded those limits. And of course, he could not be reached for comment. The activity was unusual for Heartland. The amounts transferred were higher than the norm, and the recipient, a cryptocurrency platform, was atypical for the ag lender. They were an agricultural lender. But the bank's employees, including the unnamed chief financial officer, signed off on the transactions, according to the OIG report. Haynes was a prominent figure among Kansas bankers and was active in banking associations as well as in his local community. He joined the bank in 1993 and led an investor group that acquired the institution almost 2 decades later in 2011. All that and the fact that the employees were his subordinates made them reluctant to raise questions or report the suspicious activity sooner, per the report. While the circumstances are unusual, it's common for small banks to have a dominant executive. Often regulators aren't concerned, but for Heartland, the CEO's position and prominence in the community contributed to the failure, said the OIG. Heartland's board, largely farmers and local business owners, apparently trusted executives to follow approved policies and provide the information needed to oversee the bank. That's by design. Management runs day-to-day operations, and the board has a fiduciary duty to oversee the institution. The consequences can be dire when directors don't get the information that they need. So, a couple of things going on here. So this gentleman was apparently what's known as a dominant CEO. I could do a whole episode on leadership and different traits of leaders, different leadership styles. You have transformational leaders and transitional leaders and servant leaders, and just it goes on and on. There's all different leadership types. This guy had been in banking for a long time. He had a lot of cachet, as it were. I'm sure he had a lot of trust. He had a lot of respect of his employees. He probably ran a very good bank for a long time. It's just fascinating. I would really love to know like how he got sucked into this crypto scam and what exactly happened. Did he was he invested in like an FTX and then it went down and then or he somehow was shorting and maybe he was involved with stable coins with like Terra and other stuff that failed, and maybe did these losses kind of mount and build up on him somehow to the point where like he had to embezzle the money to cover the losses, and then how was he going to try to put this money back, or how is he going to try to make the bank whole after? I mean, did he think he could just kind of flip the money? I mean, there's just a ton of questions here. And again, I have to say this is all alleged. I mean, he's charged with these crimes. He hasn't had a trial yet. We don't know all the circumstances here. We don't know what's going on. So, we'll have to wait and see how it plays out. But again, I just thought this was really interesting, and I wanted to add it to the crypto series because now we have 5 banks that failed last year, and 4 of them were heavily involved with cryptocurrency. This very different situation from the first 3 banks that failed. The first 3 banks failed because all the crypto deposits got sucked out first. This was more of a fraudulent embezzlement scheme that involved cryptocurrency, or apparently some type of a crypto scam. So again, you could see why too. Like if you saw my episode last week that I did, which was a crypto series part 6, which I did a review of the documentary Bitcoin, you could kind of see how someone may potentially get sucked into this. So what I find again very interesting in this case is that this guy is a bank CEO. He had been the CEO there for a long time. I'm assuming that this gentleman was a rather sophisticated individual, meaning that, he was a very smart guy who knew a lot about banking, a lot about finance and economics and how banks work. And, probably did his homework on crypto. And it's just again, the question is like, how did he end up getting sucked into this? Like what, like, it's a very puzzling thing. But again, just something I wanted to report on because I think there's a lot more to potentially come out with this story. I think we'll learn a lot more in obviously probably the next 6 to 12 months, probably get more to this story and see exactly what happened here. But again, it's just interesting to note this is yet another bank that failed as a result of cryptocurrency. Our regulators are still just futzying around trying to figure out what to do with cryptocurrency, how to regulate it, what to do with it. Meanwhile, we've got all these, Bitcoin ETFs taking off right now, and BlackRock's jumping in on the ETF craze with the cryptocurrency, and Wall Street, in certain respects, it seemed to do a 180. You've got Coinbase and Binance out there that are in certain ways trying to clean up their act to try to do more there. So I don't know. We'll have to continue to keep an eye on this and see what happens and see how a lot of these things play out. I have some theories on why I think the regulators are taking their sweet time with trying to bring regulations to a lot of this cryptocurrency. But I will save those for another episode. I'll tease you with the guys that until next time. So, but anyway, I hope you guys enjoyed this. If you like this episode, please make sure to like, subscribe, share. That always helps the channel. Please go check out some of my other episodes, and then I will be back to see everybody again real soon. Thanks a lot.